Hello, everybody. This is Boris Schlossberg. Welcome to the Trading Battle. Today, we have our ongoing conversation about everybody's favorite topics, prop firms. And today, I have two very, very special guests with me. We have Casper SMC and our old friend Chris Guzman from Kickstart Trading. Now, Casper, we haven't seen you. I haven't met you before, so maybe you could just give us a 2-second intro as to who you work with. What's your background in trading? How did you come and stumble into this evil domain?
Right. Sure. So I started trading originally in 2016 with the first crypto rally, but I didn't really take it as serious back then because I got really lucky. And I think that got me interested, but it didn't really turn me to a professional. And it took years. I really wasn't trading professionally and like in the correct way until 2020. And then I made it full time. And since then, I've became funded with $300,000, and I also teach over 1,000 people in a private Discord how to trade. We do all sorts of stuff from private classes to trade ideas, everything. So yeah, that's about it. Here we are.
What's your poison of choice? What do you like to trade primarily as your instrument?
Indices. So right now I'm trading them through CFDs. I've started to dabble a little bit, in the actual futures market, but mainly the S&P, sometimes a little nasty NAS, but mainly the S&P.
It's interesting that you don't trade the US 30 versus the S&P because everybody in the CFD space likes to trade the US 30.
I don't get it. I know that I honestly don't get it. It's like US 30 and GJ, like people love, and like I don't get it. It's just every strategy, like some strategies, they're going to work great for US 30. Some strategies don't. And my strategy is pretty clean on ES, and it'll move less points, but the risk to reward I get is usually better. So that's kind of why I stick with ES.
Well, US 30 is an easy tell because it's a 40,000 point instrument that moves 400, 500 points a day. So that's why people like it.
Yeah.
That's why I like trade. But that's interesting that you go this way. What about you, Chris? What are you trading these days? Chris is with Kickstart Trading. He's been a prop hand for quite a long time already, seasoned prop veteran. What's your primary instrument of choice when you're trading?
Gold. I love gold. I absolutely love gold.
I'm sorry. Were you born in the 18th century? I didn't realize.
I could have been. I certainly could have been. No, gold is my primary poison of choice.
I see.
But then I also trade largely using the Dixie. So, using the Dixie to kind of set the tone, get the overall analysis, and then executing on the majors based on Dixie.
So it's basically it's a pro dollar day, anti-dollar day for you, depending on and then
you got it.
The Dixie. No, it's a great strategy. It's like it's an oldie but a goodie. I remember when I was at FXEM, they used to be the primary way we would orient ourselves with trading. So of course, the world of prop is multifaceted, multifolded, and it just seems to be evolving in 100 different fashions very, very, very quickly over the last couple of years. I mean, I would say really it's become the most interesting and the most popular subject of choice amongst retail traders because it's given for the first time ever retail traders access to outside capital, right, in a structured manner. And it's become so popular that there's thousands of prop firms out there now. And I wonder, given the evolution of prop, there's sort of, Jesse, maybe you and I can talk a little bit about this. There's really sort of, I think, two primary categories now in prop. There is the FX CFD model, right? Mm-hmm. And within that model, there is the two-step eval or the one-step eval. It's sort of like, you have to pass one challenge and then you have to pass a second challenge and then they give you money, or you can just pass one big challenge. Or there's the second model, which is the futures model. And in that particular category, it's a subscription model. You basically pay a monthly subscription until you either fail or pass, and then you can reset yourself up. Is there anything else I'm missing? I mean, I think those are the two big, broad ways that it's structured. Yeah.
Yeah, that's the gist of it. I mean, the only other difference that I think is notable is the profit targets are a little bit different. Most of the futures funding models, they have a little bit more strict of like daily loss and also total drawdown. And then, depending on which firm it is, they allow different amounts of contracts to be traded. So I think that they are a little bit different of an experience. But like you said, the biggest difference is, either the one-time fee for the evaluation or the subscription model, which I think there's definitely pros and cons to both of those.
Actually, let's talk a little bit about that. Like, what are the pros to the subscription model? What are the cons? What would you say?
I think that the pros to the subscription models, it gets you used to trading in a kind of, I guess, more white collar market. For example, what I've been doing lately is taking some of my money from, the CFD funding firm and starting to dabble in futures, like with a personal account. And it's, I've been practicing for some time. It's definitely a different beast. You know what I mean? It's your risk management's a lot different. You have to, you're not getting sim fills as much. I mean, you are on some, depending on your firm, if you're doing a funding firm. But, if you're trading in a live market, there are things that are different that people aren't conditioned to worry about or don't learn trading through certain, which is it's not like a bad thing, but I think that's a benefit of it. And then also, with the subscription model, I mean, if you're doing very well, you can obviously get funded for a lot less, but it is, it's a double-edged sword.
What about you, Chris? What do you think about the CFD FX space, especially the difference between the two-step process and the one-step process? How do you judge those type of structures?
So with our program at Kickstart, I mean, we offer a one-step process, and I think that that's just a much better approach. I mean, the way we tackle it is like, look, all you have to do is prove you can generate 10%. Don't lose more than 5% overall, or 4% in a day. That's it. And whether you do that, in a day, a week, a month, a year, it doesn't really matter. And it's a one-time fee, so it's not. What I don't like about this, I hear what you're saying about the subscription model, and I agree to an extent. But what I don't like about the subscription model is obviously it's an ongoing cost. So while it may seem like less upfront, less of a barrier to entry, I guess you could say. You're paying that subscription in perpetuity, whereas with the other model, it's a one-time fee. And in the case of the challenges, I don't really see the point of like a two-step challenge. I never did. If you can prove you can trade in the first phase, then what's going to be different about some second phase? You know what I mean?
It's a chance to make sure you fail more.
Yeah, precisely.
It's an extra chance to make sure you fail. That's
precisely.
Maybe Jesse, you might have a different view. How do you think about that, the two-step model? Because you're actually funded by I'm sorry, you were funded by FTMO, you said? Right?
No, my Forex funds.
I'm sorry. Oh, yes, whatever. You're funded by a prop firm, but you went through a two-step process, right?
It was two-step. So it was you have to get 8% without losing the 12%, and then you have to get 5% the second time, which it's easier than some. Some are 10 and 10, some are 10 and 5. I think 10 and 5 is the more popular model.
Right. Sorry. So in that process, in the two-step process, you had to make 8 and you had a 12% drawdown. You had a
total drawdown. Yeah, but then 5% daily. So you only had to get it.
Really generous. Those are it's sort of an easy first target, much wider second target. It's kind of reverse of the single step process. And then on the second step, what do you do?
Second is just 5%, and then you still have that overall 12% drawdown. I think that it sounds good, but like let's be honest. I think that if we had the statistics of who gets to a almost a 10% drawdown, that actually would turn it around. And I'm saying it's a mental thing, though. It's a mental thing, and I think that's the name of the game, right? Is you can look at it in different perspectives, and it can either hurt you or benefit you. Like somebody could be more reckless, say, "Oh, well, I have 12%." You know what I mean? So then they start tumbling, and snowballs. Or you look at it like, okay, well, yeah, I have that, but I'm not trying to get anywhere near that. So
given these structures, Chris, what do you like? What is your optimal strategy these days, given the various prop trading formulas that are thrown at you? What do you think is the better strategy to trade these days?
I mean, in terms of any particular strategy, trading is like sports, right? There's many different ways to play the game, but
Yeah.
it all boils down to the fundamentals, right? Like having confidence in your strategy, having a fundamental knowledge and understanding of the markets, being disciplined, right? And
Yeah.
crucially, having a trade plan. That's something that too many people overlook. If you sit down to start trading and you don't have a plan, there's no goal there. There's no sort of finish line. You know what I mean? You can get lost, right? You can get lost, and you can turn a profitable day into a losing day. I know I've done it many times.
Yeah, absolutely. Jesse, would your plan start with size? I think size is something that people completely underestimate as a variable in prop trading.
Like, you mean like position sizing?
Yes.
Yeah,
I mean,
for sure. I mean, that to me, it's kind of crazy whenever I hear like that's just a given, especially whenever like you have like a very
that's
strict.
the funny part. It's a given to those that know, and it's literally the single biggest variable to those that don't, that miss it.
Yeah, common sense isn't all that common to everybody. One person looks at it in a different perspective than others. But I mean, to me, I'm like, okay, well, I know I have this much I can lose. So I know that, this strategy is going to yield, I can, the way I look at it is like, if I have tested my data, how many normal losses in a row, what kind of normal losing streak can I go on? Right. And then, let's go ahead and size my position that if that happens, I'm still not near my drawdown.
Right.
You know what I mean? So you have to look at it like, I mean, it's just really get down into the nitty gritty and do this stuff people don't want to do. So for instance, 90% of people, they say, don't make it. And with prop firms, it's probably even greater. And the reason for that, I think, is that there's a lot of stuff that 90% of people don't want to do. So if you have 10 traders that are newer, how many of those do you really think are actually back testing and actually taking data and actually journaling every trade and paying attention to the details? I'd say probably 1 out of 10, right? And I don't think it's a coincidence that those numbers align. So, a lot of people just get prop firms because they have like that idea of like, oh, I can get rich. 10% of 300K, that's 30K. I'll make 30K a month. And it's just, you think like that. And then, you start sizing in, you get emotional, which it's stuff that I can see how it would happen. That's why that people from like most walks of life aren't successful in trading to start, because it's basically rewiring your entire logic. But, I'm a numbers guy. So I never had a problem with position sizing. Like it's just, on challenges, I risk 1%. On a live account, I risk 0.5% or 0.25% if I'm in drawdown. So, but
so you risk 0.25% on live, between 0.25% and 0.5%, and 1% on challenges. And within the challenges that you're trading, you have like a 12% budget. So that's well within your budget. You really have to have like even if you have 3 or 4 consecutive losers, which I'm sure is probably rare given how you carefully journal everything, it still gives you breathing room to come back, right?
Yeah. Oh, I'll have 3 sometimes. I mean, I'll have 3 losses sometimes. I'd say that's
where.
I
have my whole strategy actually allows for like literally not a maximum 9 losses, and I look around at it, and the 3 losses is like almost common. Especially if you're trading high frequency trading like I do. What about you, Chris? What are some of the strategies? What is this primary thing that you focus on? Is size also a key component of yours? How do you size your strategies?
Yeah, I mean, it's just about consistency, right? And I agree. The question you should be asking yourself is not, you shouldn't be focusing on the profit. You shouldn't be looking at how much profit can I make. It's how much exposure am I putting out there? What do I stand to lose? What's the worst case scenario? And that's the one thing that, Casper's absolutely right. When your emotions get involved, that's where the wheels come off the wagon for the vast majority of people, and that happens because of a lack of discipline, lack of confidence, but also a lack of consistency. I can't tell you the number of times I've seen it where somebody will do really well, risking small, doing small positions consistently, and then they'll get big and bold, and next thing you know, double and triple because they're like, hey, or they're trying to take advantage of a move, or whatever the case may be. And next thing you know, big and bold, right to the drawdown. And so it's all about consistency. And for me, it's about keeping things conservative. For me, you're going to have good days, you're going to have bad days. That's part of it. And so, for me, it's all about, can I still trade this tomorrow? Can I still come back? Will there be another trading day tomorrow? If the answer is no, then I need to walk away.
That's a great. I love that answer. I love the word exposure, because I think we all focus on the word risk. Risk is what you take. Exposure is what you get. I think few of us really appreciate the word exposure, because that's really is. If we're on the wrong side of the market in large size, we are exposed more and more. It's kind of like having your clothes stripped off of you by piece by piece. Eventually, you're gonna be swimming naked, as Warren Buffett says. What have you guys learned? Listen, since all your experience, you've been trading prop for quite a while now, Casper. What's been the biggest change that you've seen within the space?
Well, first off, just the emergence of a ton of new different firms and different, cheaper options and different. It's just it's like a craze. So
sorry, can I interrupt you there? Because I'm sure you've seen a lot of different firms. My question is, how different are they? Like, my nagging feeling that I see, I sort of done like a spreadsheet of everybody. Everybody is within 5% of each other. Like, I don't really see it. I don't see the Walmart of prop trading out there. All I see is that I see pretty much all Sears Roebucks all the way down, or Kmart. No, I don't mean to make fun of it, but you know what I mean? Everybody is within the same parameters, same price limits, same eval things, within $100 of each other. Am I wrong, or do you see really somebody just breaking the mold, coming out with some incredibly lucrative model that nobody else has seen?
No, I don't. I think, like you said, they're all very similar. I think that the main difference between them is the reputation behind each firm. So, what makes no sense to me is when people will, like you said, they'll pay $50 or $100 less for a firm that has they're probably a skeleton crew. It's probably like one guy with a team of virtual assistants and has no actual funding. And then they're charging $100 less, and people will go for that rather than going with, something that has reputation. Completely makes no sense to me. But that's a big thing right now, is just so many different firms. I think the only way that somebody's going to really break the barrier is get some skin in the game, and also do away big time with the timing restrictions. You know what I mean? And maybe somebody offers both the FX, CFDs, and futures. That would be huge. I think it'd be massive. I don't know if it'd be it could be two different accounts with the same firm,
right?
But that I think that could be a very, very big benefit for any new firms that are trying to kind of bridge that gap.
Yeah, straddle both worlds. What about you, Chris? What have you seen that's new?
Well, first of all, I'd like to just say to Casper, if he doesn't like time restrictions, I have a great firm I can refer you to. The biggest change, there are a lot of firms out there now. I think the biggest thing I've seen since we launched our firm back in 2021 is that the terms have progressively gotten better, right? And that's because the competition has gotten more fierce. Firms are forced to change their terms and give more favorable terms, and I think that's a good thing. Even with us, when we first launched the program, we had different terms to the ones that we have.
I'm actually curious. Like, could you give me an example of what the terms used to be like to what they are now? Like some things that you've seen.
Yeah. So first of all, with regard to drawdown, that's a big one. There are a lot of firms out there, us included, to be honest, in the very beginning, where we started out with a 2% drawdown, daily drawdown.
Right.
And we very quickly realized, though, that just was simply too tight. It just wasn't. It's just not fair to do that to people. To expect a 10% return and only give them 2% in a day. So we ended up doubling that. And then other firms that were doing similarly ended up having to come along and offer pretty similar terms to what we offer, to be honest. There are other instances with other firms that I'm told I'm not supposed to name, so I won't name. But there are other instances with other firms that that have done away with old accounts that were just clearly designed to just trap traders. It was just clearly to an experienced trader,
right?
You can very clearly see through these things, can't you?
Right.
And a lot of these programs were designed to just trap traders, and I think that's changed. It still exists; it's still out there, but it's changed in a big way, and I think that's a good thing. Obviously,
so I'll bring up one thing that I've seen. I think it's kind of interesting, and this comes out actually out of the future space. So almost every prop firm has what's called a either end of the day or a variable drawdown. So in other words,
trailing,
the higher you go, the higher your stop loss moves with you. People hate that. They hate the idea of like, I started at, my stop loss was at 95. Now my stop loss is at 97 or 100,000 because I made 2,000. And it's kind of just, it writes up with you. There is a invention that the futures firms have come up with called the static drawdown. It's a much more expensive account, but what they basically say is it doesn't matter, as long as, you start at 100,000, and as long as you don't go down below 96,000 or whatever the drawdown they give you, you could do whatever the hell you want. You go up, down, sideways, inside and out, come within an inch of it, go, 99.9% towards target. We don't care. Your drawdown will always be static. I'm wondering, do you think that's going to be a function of FX and CFD providers eventually? Because people, what I find is that it's not even the mechanical issue of it. It's the psychological thing. People love certainty. They know that's why people love all you can eat buffets. They, you pay one price, you get everything you want. They don't want to be surprised that, they think they're doing well and all of a sudden they're out of the whole challenge because, the drawdown moved up on them differently from what it was at the original. What do you think about that?
So if I could go first, Boris.
Yeah, sure.
As speaking as someone who runs a prop firm, the reason that we do that is because we're trying to encourage our traders to maintain the consistency. That's number one. Mm-hmm. But number two is you have to look at it from our perspective as well. We are in this to make money just like you are. And the last thing we want is for you to have a good month or a series of good months to then just give it all back again, and then some, you know what I mean? And the way we see it, but one of the things that we do is we have that trailing drawdown, but only up until you've generated 5% in profits. So once you've hit 5% in net profits on the account, what we do is we move the stop loss to the starting balance, and then it stays there. So anything you generate above that 5%, you're building your own cushion that way. And then you still have the daily drawdown that you have to watch out for, because again, we're not trying to take 3 steps forward, 5 steps backwards, right? We're trying to have consistency and trying to make money with you, but your overall drawdown grows. And I think that's a nice compromise between the two. The other thing is, look, I hear what you're saying about surprises, but I think it's really important that firms, and this is why we take every effort to make it very clear what our terms are. It's very important that firms are upfront about that. There shouldn't be any surprises. And just because the drawdown is trailing, that's not a surprise if you know that going into it. You know what I mean? Okay. It's just about understanding it.
Right. We're coming up to the end of the show, and I wanted to ask you, Jesse. You've been around. You've seen. You sort of done a lot of challenges. You've seen various variations. What is the key things you want to put into your toolkit? As somebody who's new, who's coming into this, I mean, you mentioned something about doing a trading journal, but let's give me top 3 or top 5 things a new trader should have before even starting a prop challenge, should be doing before even starting a challenge. I'd love to hear those.
Yeah. So for one, I have a link also on all my sources that's literally, we'll put this into text form for anybody watching that wants to look at it later. It's a qualification thing, but it kind of helps you go through all the steps, but in a really short, condensed way. Like Chris said earlier, number one is a trading plan. Like if you don't have an if-then process, you're done. Like it's not a matter of if, it's a matter of when. How long are you going to last without it? Like you might pass that challenge, right? But we've seen the statistics on how many people pass a challenge and then lose it before a payout. So,
Absolutely.
if you don't have a plan that you have confidence in, and not just confidence, like you have to have rational confidence, which means like you know if you should be confident in something or not. Do you have, like, if you have a tested plan that says, hey, I'm the probabilities are in my favor, you're going to operate and be able to execute easily and go through those losses and losing streaks more so than if you just have something saying, well, I think this trading model kind of works. Like, so number one is a trading plan. Number two, and this is kind of like external to trading, but is you need to have like a very solid routine and a discipline in your whole life. You know what I mean? People can't even maintain waking up at the same time every day or going to the gym, and they think they're going to maintain, hundreds of thousands of dollars. I mean, it's crazy to me. So I think that's a big one that a lot of people want to, just forget about. And then really, another big one is financial security. I know these are kind of like external to trading, but I think a lot of people get challenges in hopes of being able to make a lot of money, and they need money. You're already putting yourself at a massive disadvantage, because if you're not playing with money that you're willing to lose, you're going to operate differently. So, number one, trading plan. Number two, have discipline and just a solid routine in your whole life. And number three, be in a financial spot where you're actually going to be able to mentally operate on your A game. So I think those are the three biggest things for people that are trying to get it funded.
Sounds good. What about you, Chris? What about like more specific tools that you might want to recommend to traders?
So I just want to say I love his answer on that. That was really, really good. And I agree wholeheartedly with everything he said. He couldn't be more right. And I was always taught that, if you fail to plan, you should plan to fail. Right. So the first thing I'd say, again, agreeing with Casper, trading plan, right? Absolutely critical. And inside of that trading plan, you have to include your risk management, which has to include profit taking, right? You have to have goals. You have to have, just getting in and hoping for the best is not the way to do it, right? Because floating profit is not real profit. Right? Unless you actually close that trade and take it off the table, you can lose it very quickly. So that's point number one. The other thing is a risk calculator. That's really important, especially if you're not using static stop losses. If you're doing like a dynamic stop loss approach, as I do, trading candlestick formations and patterns and things like this. Then a risk calculator help you.
Is there something you could recommend to our viewers?
We actually have our own. Absolutely. If you head on over to kickstarttrading.com.
Wonderful. Yeah. I said you're beautiful.
The next thing is solid education. And it's kind of, I would argue that this is kind of the first thing, really, because, trading plan is critical, but without education, without understanding how these markets work, doesn't matter what your trading plan is, you have no experience. You at best, you have a 50-50 shot of making something of it, right? At best. And so, really solid education. And then, a good support group helps. Trading can be a very lonely place. So finding a group, networking with other like-minded traders, other people who are trying to do what you do, or what you're trying to do, is really, really helpful. And then the last thing, ideally, in an ideal world, if you can afford it and you can find someone who you trust and who you can relate to, and who you think you can help, a mentor is really a big one, right? Because there's no replacement for experience, as in, you actually experiencing the markets for yourself. Nothing could ever, supplant that. Yeah. But when you have a mentor, when the storm comes, it's like having an umbrella there, right? It's someone who's seen it before, someone who's experienced it before. So, this may be very new and shocking to you, but your mentor has seen it 900,000 times, and knows how the story ends and can help guide you through it. So those 5 things: trading plan, risk calculator, solid education, a good support group, and ideally a mentor. And incidentally, all of that is available at kickstarttrading.com.
Very nice. That's great advice. Super valuable from you guys. Why don't you guys tell us, Jesse? Why don't you tell us exactly where traders could find you, and what you do on a day-to-day basis, so we could sign off with that information. And maybe if you'd be so kind, you said you had that list. Maybe you could even tweet it out on your handle, because people see your handle there. Or they can find it on the website. Or you can put a link to it so they can get on the website so they can see the start.
Sure. So the link to that is in the bio. I can tweet it out too, but it's the link in the bio. It's like the second link. And then also the Playbit Discord is where I am active every single day. It's not just me.
What's the name of the Discord? What's it called?
Playbit Discord. It's also in my bio too. It's where I got my start professionally trading. And I love that group. I love everybody from it. Super awesome.
Don't you know nobody reads the bio? Don't ever say it's in my bio. Nobody reads the bio.
I don't know. Mine gets a lot of clicks. It gets quite a lot of clicks. No, so the Discord is where I spend most of my time. That's where I do all my private classes. And then on YouTube, I put out a ton of free stuff. Really been going hard with YouTube lately. So I'd say Twitter and YouTube is where I'm most active. That's where you're going to see me posting analysis and posting videos, how-tos, stuff like that.
Sounds great. Awesome. That sounds great. We're going to be watching that. And what about you, Chris? Where can people find you?
Yeah, so head on over to www.kickstarttrading.com. You can also find us on Facebook. Just search Kickstart Trading, YouTube, Twitter. Yeah.
What do you do on YouTube? Do you put out videos there? Educational videos?
Yeah, so I used to be a lot more active. I admittedly haven't been very active on YouTube in some months, but I am planning on getting back to it later on this year.
Yeah.
But yeah, I'm all about kind of similar thing, right? How-tos, tutorials, walkthroughs. I'm going to be doing a lot of platform walkthroughs.
What's your platform of choice, by the way? What are you trading through now? TradingView?
So for my charts, I use TradingView.
Okay.
For trade execution, I use MT5 and CTrader. I love CTrader.
Okay, whatever. Okay, that's fine. I'm a big MT5 guy, so that's fine. What about you, Casper? What do you use as your platforms?
MT5. I mean, I chart with TradingView, but MT5. Right. And then for futures, I use something that integrates with TradingView. I won't lie. That's another thing in closing. Funding firms that can get that. I know there's a lot of barriers, but TradingView integration, I think there's one that does it, but people would be all over that. That. Oh, you do it? Nice. There you go. That's awesome.
We do it. Yeah, we do it. But so just on the live side though. So once you pass your assessment, it's then integrated directly into TradingView. So
right. Very cool.
Come check us out.
Yeah, I'm going to take a look after we're off here for sure.
Yeah, absolutely.
You made a sale. You made a sale by the end of the show.
Always be closing, Boris.
Always be closing. Hey. Gentlemen, it's been a pure pleasure. Thank you so much for sharing so much really, really cool knowledge. Everybody, we're going to be doing more of these prop firm discussions and conversations and debates because it's just so much to talk about. It's really one of the most interesting topics in 2023. And I hope to see everybody there. And don't forget, Trading Battle's coming back. Make sure you follow us. Make sure you hit the link. Make sure you do all the good things. I'll see everybody in the markets. This is Boris Schlossberg, over and out.